if I told you that $1,000 invested in Tesla 10 years ago could have grown into over $70,000 today? That's not a stock market myth. That's the actual math. But here's the surprising part. Back in 2013, most people thought Tesla was a risky gamble at best, a doomed experiment at worst. Today, we're going to explore how that $1,000 bet could have skyrocketed, what challenges Tesla faced along the way, and the lessons hidden in one of the most remarkable investing stories of the decade. Let's rewind to 2013. Tesla was barely on Wall Street's radar. The Model S had just launched, production was limited, and skeptics questioned whether electric cars even had a future. Headlines called it a risky venture, while short sellers labeled Tesla a ticking time bomb. At the time, Tesla stock traded for around $6 a share, adjusted for future stock splits. For most investors, putting money into Tesla back then felt more like gambling than investing. So what would $1,000 investment have bought you? Roughly 166 shares. Over the next decade, Tesla scaled production, opened gigafactories around the world, launched the Model 3, and completely reshaped the auto industry. After several stock splits, those 166 shares would have grown into 2,324 shares today. At Tesla's current price, that initial $1,000 would now be worth over $70,000, a return of nearly 7,000%. To put that into perspective, the same $1,000 invested in the S&P 500 in 2013 would now be worth about $3,000, a standard savings account, just around $1,200. Tesla didn't just beat the market, it demolished expectations, creating one of the most dramatic wealth-building opportunities of the decade. But here's what many people forget. Tesla's success was never guaranteed. Countless electric vehicle startups had failed before it. Analysts predicted bankruptcy. Even after 2013, Tesla's stock experienced multiple crashes of over 30%. Investors needed both conviction and nerves of steel to stay the course. For every Tesla, dozens of companies never reached the finish line. So what's the lesson here? It's not about hindsight or wishing you had bought Tesla. That part is easy to second guess. The real insight lies in the power of time, patience, and compounding. Small, early investments, when left to grow, can transform into life-changing sums. But the key is caution. Putting everything into a single stock is risky. Tesla is the exception, not the rule. Diversification, spreading your investments wisely, is what turns gambling into strategy. In the end, the Tesla story reminds us that extraordinary growth often comes from taking calculated risks, understanding the long-term potential, and staying patient. 10 years ago, few saw the path Tesla would take, but for those who believed, the results were extraordinary.